What's up, Premium Chasers? Today, we're talking about all things rolling. I got two positions that are expiring here soon where I have an opportunity to roll those positions, roll those covered calls, roll those cash secured puts. I'm going to show you how I kind of think through things and if rolling is the best decision for me. And if you want the full rolling playbook completely for free, no opt-in, no strings attached, just drop a comment down below. I'll personally send you that full detailed guide, perfect for those of you just getting into selling options, or if you're a veteran, need to brush up on those skills, drop a comment down below. I'll send it to you, and hit that like button and that subscribe button. Let's go over the shoulder right now, guys, because we've got two positions expiring here shortly. One very, very shortly here, American Airline put, October 17th. That is 2 days away from now. We have a $12 put. So if you don't know what I'm saying here, I'm saying that, hey, if American Airlines is trading at $12, right, at the close on October 17th, guess who's buying it for $12, right? But guess what, right, guys? American Airlines has been moving, right? This is now becoming my new Snapchat for the next couple months. So you guys can obviously go find my broker statements at onlypeterpru.com as well as optionsellerschool.com if you want to go see, the progression of my portfolio here. I try to be as transparent as possible, show you guys every move I'm making here. But you guys know how I was having a lot of fun with Snapchat, like just so much fun with Snapchat. I was ping-ponging back and forth. And now American Airlines is doing the same thing. It's one of the reasons I actually really love selling options on like quote unquote cheap stocks, because you see these kind of insanely aggressive movements. And American Airlines, that's my OG, baby. That's one of my favorites wheel strategy, Ark Options Strategy stocks. So we could see, I was already assuming assignment. Now, when I sell cash secured book, guys, I already assume, your boy buying the share. So I said 12s, right? I did my 12s around just a month ago here, around 916, when it was trading around 1250ish. I was like, you know what, I need to get some money to work. I can't wait for the bottom BB. I'm just gonna open up them 12 puts. Let's get it, right? So I did it, and last thing you know, we crashing down to 1130, and I was like, all right, whatever, it happens. All right, I'll still probably be able to do my 12 calls or whatever. And then we hung out here for a little bit. We started seeing some life here back towards 12. We dropped down a little bit further, and then bada bing, bada boom. Literally the past 2 days, right? American Airlines has really started taking off, pun intended. Let's get those dad jokes in, right? Let's go, right? But with that said, I think there's a lot of hype around earnings, a lot of news coming out with Boeing. Deliveries have been skyrocketing as they haven't seen since 2018, right? So there's a lot of positive sentiment around the whole airline industry and Boeing, and I think all of that is related. With that said, what are my options right now? Okay. My options are, I can either, with my put, just let it go to expiration. Now, when would I do that? When would I not do that? So quickly to recap, because we always have to go back to our trade log, right, guys? Listen, trade log, amens, listen, live, die, breathe by the trade log. Let's go. If you want my trade log, first link in the description of today's video. You also learn more about the Ark Options strategy, but you can see here, right? My American Airlines, I did it on the 18th. So less than 30 days, just under 30 days. I had a 3.36% ROI on my collateral, right? I locked up $1,200, made $40. That's a 3.36 return. Little aggressive of me for sure, because I was in the middle Bollinger Band area, right? I wasn't at the bottom Bollinger Band per se, but still, right? A little bit more aggressive. I got to add some entertainment value to this. Y'all already know. So I already got that right there. Now, I have wiggle room. Why do I think it is so, in my opinion, I'm going to say this in a high-level statement. It's not always true, as you're going to see literally with the trade I did right under it. But when I'm trying to do more aggressive plays, like you saw this with my Snapchats, right, where I was pushing over 3% ROI on my collateral. You see this with my AAL, right? I'm pushing over that 3% mark, right? Why am I doing that? Well, because it gives me enough wiggle room to close out my position early and still hit my 2% ROI on my monthly target. That's usually what I'm going for. Obviously, I've been very aggressive here. I'm closer to an average trade of around 2.89%. So, right, some lower, right? What my craft times, I'm only at 1.86, right? But for the most part, I'm around that, just under that 3% mark, which is a little aggressive. But why do I do that? There's a reason I do that. And the reason I do that is I have cushion to close out my position early. Now, why is that important when we're thinking about rolling our positions? Well, because rolling is simply buying to close your position and opening up another one. Guys, that's all it is. That's all it is. You're buying to close your cash secured put, and then you are selling to open another position, right? So for example here, right, if I, right, click roll here on Fidelity, right, you can see it auto populates, buy to close, one American Airlines $17.12 put. That's my current, right? Now look, my bid ask pretty tight, 11, let's just call it $12. It would cost me $12 to close this trade out. Okay, let me see what that looks like. $12. Okay, that gets me to 2.36%, right? ROI on my collateral. Is that good? Is that bad? I don't know. I don't know right now. To me, I kind of want to squeeze the juice, right? $12 is a little much for me, even though I'm being a little bit aggressive here. But with that said, oftentimes with my cash secured puts, I will close them out early. Now, here's the issue I'm having right now, why I don't want to close this out early, right? Because, right, we do have United earnings after close here today. So we don't necessarily know what's gonna happen here. We really don't, right? It could be positive, it could be negative. We you know, who knows, right? The market could react. And that's all stuff I'm factoring into my mind. Like, do I want to take that risk now, Pete? Do you close it out for $12, you recoup your $1,200, and you know, the more I'm even thinking about it, the more I'm even thinking like maybe you should. But we gonna risk it. We risking it for you. I ain't doing this for me. No, but in all seriousness, I don't mind getting assigned here because I want to then do my covered calls. So like that's my play, right? So for me, if I wanted to sell to open another one, I can go out further. Big one. Okay? When you are rolling out, for me, right? If I was going to roll out my position, and let's say I go out another month, I'll go November 14th, right? And let's say I just keep the same strike. It's not confusing. Rolling is not confusing. All I'm saying is I am buying to close my current position and just selling another put. But here's the issue, right? So even so, let's say my net credit, okay, we'll get around $53 of $52 of premium on this trade. Damn good. That's a good trade. That's a very, very good trade in my opinion, right? I actually really like that one, right? Why? Because, right, going over to my trade log, right, I only collected $40 here, right, on my 12s. I'm going to collect $50+, right, on $1,200 in collateral, but it's higher risk. It's way higher risk, right? But it's something to consider, right? It's something to consider. It might be a trade that I do depending if American Airlines continues to kind of jump up here. Now, here's where the kind of where my mind goes in terms of that's kind of hesitating me from doing it. And it's going back to the technicals. Now, you guys know I'm not like some technical guru or anything. I'm not a guru in this at all, right? But for me, when I go back to my rules, right? Like, what are my rules? I have very strict trading rules for myself. And when I deviate them from them, sometimes I win, but oftentimes I lose. So for me to roll this position out, right, today, it's a green day on American Airlines. I'm buying to close my position, which is fine. Buying to close it is fine today for me. That's not a problem. But does it actually make sense for me to sell to open another position on American Airlines when it's above its bottom Bollinger Band, working towards its 200 and 300-day moving averages? Does that make sense? Why would I do that? Why would I do that, right? For me, that's why I'm not doing it. Right? Now, people do. A lot of traders do that, right? Because they just want to kick the can. They're essentially kicking the can down the road for 12. But for me, I go back to be like, okay, this trade accomplished what I wanted it to accomplish for me, right? I hit my 3.36%, well over. Even if I close it out for that $12, right, I'm still collecting. I got a nice 2.36% return on my collateral. Okay, fine, right? I can do that. I'm fine with that. I will go find another opportunity elsewhere. Okay. And if I look at the chart here on American Airlines, and we could see how aggressive it has kind of been over the months, for me to sell another $12 put when the 1230, right, is now up above the middle Bollinger Band. Look, when I sold my last put, look where 1230 was, right? When I sold my last put, it was around this 1230. I was underneath this middle Bollinger Band line. Right now, again, it wasn't necessarily perfectly timed at the bottom Bollinger Band, but it was like right around here on the 18th, right? So if I scroll down here so I could see the date, you'll see I opened this position, yeah, like right here when it was like at 1240. But look, I'm below the middle Bollinger Band area. So that's an ideal, right, oversold territory on it. So at least I have some sort of, it's a red day. I've got momentum going down, right? So I'm able to get that $12 put with a great ROI and collateral, right? And it's less likely to occur because we hit the bottom Bollinger Band and usually retract, not always, but we see it in this case, it's happening, right? So for me now, 1229, right? We're trading at 1228, whatever, right here. And we're above this middle Bollinger Band area already. We're already above it. We're already above it when just a month ago we were below it, even at 1240. So it's not a good trade, in my opinion. This roll would not be a good roll. Now, in the grand scheme of things, nice thing about running the wheel strategy and selling options is, does it really matter? Right? Does this even matter? Because if you want to own the stock at 12 and you are willing to collect even more juice to collect that at 12, okay. That's fine, right? That's the great part. We're not like chasing here. We're not like crazy hype-driven traders or anything like that. We stick to our rules and to good companies that we actually want to own. But for me, I'm like, I'm going to look elsewhere, right? AAL's having a crazy run up here right now. So for me, I might honestly, I'm probably going to close it today. I'm going to be honest with you guys. I'm going to be honest with you. Probably when I stop recording here, I'm most likely going to close this position out, because now that I kind of I've really been thinking about it with after close today, United reporting earnings, that concerns me of that bringing down the other airlines. So, and again, earnings are coming up here soon from for American Airlines, which leads me to another point when you're rolling. Be careful. Robinhood does not tell you when your earnings are. Schwab, I believe, does, but I know obviously Fidelity tells you right on the expirations when that's going to be. You want to avoid earnings weeks if you can, right? If I did the 24th here, right, that is a lot riskier of a play, right? It's a risky play right after earnings here, right? It's a much more greater chance of assignment, right? So for me, I recommend avoid before earnings, right? Because there's, again, lots of volatility, and then avoid after earnings as well, right? If you absolutely must, going out a month in advance is not a bad idea. But for cash secured puts, usually, I'm going to be honest with you, the setup's not good enough for me to roll it most of the time, right? Because if it's running up, I can just buy to close my position and then just use that money elsewhere. How about the covered calls? Okay. Well, your boy's not in a great situation right now, guys. I'm going to be honest with you, right? So Kraft Heinz right here, I'm in the $27 calls, right? I'm in the $27 calls right here. Okay, let me just quickly refresh this chart. So Kraft Heinz is trading around $25. Actually had a good day here. Yes. Oh, a nice little, I'm kind of green here today. So I have a $27 call here on Kraft Heinz. And I'm basically saying I'm willing to sell my 100 shares of Kraft Heinz at $27, okay, on October 31st. Now, I still have about 2 weeks out to that. Now, I can go and try and roll this. Again, all I'm saying is I'm buying to close my Kraft Heinz position, and I'm selling to open, right, and kicking the can down the road longer. Let's go November 28th, and then let's see if I can even do a 27. Let's see, and I can get a net credit of about $28. Not bad if I really want to kick that thing down the road here. I can collect $27. It's not really juicy though, in my opinion, especially on locking up $2,700 in collateral. You could see my $27 call here. I collected $50 of premium for just about under 2%. For me to roll that out, obviously it's going to cost me a decent amount of money because that bid to ask spread is so wide, right? $17, let's just call it. And then my bid to ask is so wide even on the sell to open, right? There's not much opportunity here for me with Kraft Heinz. Now, for me, I really want to get out of Kraft Heinz. I want to sell this thing out. I want to get out especially with the split that's happening with Kraft Heinz. So for a company like this, I wouldn't roll this out, right? Because number one, I want to sell it. I do want to sell this stock, so I'm just going to let it go to expiration. Now, rolling your position with covered calls is a lot more common than rolling with your cash secured puts. Why? Well, because a lot of people will tell you when you're doing you're rolling your covered calls, you're essentially pushing out that tax burden of selling off your shares. So you could push it out a year, 2 years, right? Well, not your covered call, but you could just run, do your rolls every single month and keep pushing that appreciation. But I would only do that if you're extremely bullish on the stock. Look, at the end of the day, you're gonna have to sell your shares at some point, right? It's either you kick that can down the road, keep collecting some premium on a monthly basis. It's going to be a little bit lower because you have to buy to close, then sell to open another position. But again, that tax liability is getting pushed out further down the road. So that really just depends on what your strategy is. Do you actually want to sell your shares? If you want to sell your shares, just let them get sold. If you want to push that liability because your cost basis is really, really good and you don't want to necessarily get hit with taxes yet, and you want to push that out for tax purposes, yes, rolling on your covered calls is an absolute necessity. Guys, if you want to learn more about the Ark Options Strategy, strategy, how we generate 5 premium income sources with one strategy. Click the first link in the description of today's video just for learning more. You're also going to get my full trade log that you can follow along with or copy for yourself so you can log your trades. And really, I can't stress it enough, your North Star. What is your ROI on collateral? Click that first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.